Hey guys, in this video, we're going to talk about different strategies for investing your money. Now, before we make the pie chart, let's first understand some basics. What is the basic idea behind investing? The idea is that when you invest your money, you want to put it to work so that it can generate more money. So basically, your money will earn money. And for that, you have to invest in assets. And the most important thing is that the asset should be in something which is called a store of value. That means if you have invested your money today, you should be able to preserve its value over a period of time. Let's take an example. Let's say that you have $100 and you want to invest it. What are the things that you can invest? First thing you can invest in is stocks. And in stocks, you can invest in individual stocks or you can invest in mutual funds. Now, what is the difference between stocks and mutual funds? A very simple rule of thumb is that you can subtract your age from 100 to get the percentage of your portfolio that you should have in stocks. So, basically, with mutual funds, you're diversifying your risk. As you approach your retirement age, you want to reduce your risk so you would have more bonds and less stocks. In simple terms, stocks represent ownership in a company. So, if you buy a share of stock in a company, then you become a shareholder of that company, which means you own a small piece of that business. Now, this might sound strange, but investing in your education can be one of the best investments that you can make. And when you buy a mutual fund, what you're actually doing is buying a tiny piece of all the stocks that they have in their portfolio. And now, what is the ideal asset allocation for investing? And the best part about it is that there are so many free courses available online. For example, if you're 30 years old, then you can subtract 30 from 100, which means 70% of your portfolio should be in stocks. Now, investing in art might sound very exclusive, but it's not really so. Gold has been considered as a safe investment for thousands of years. There are various ways to invest in gold. You can either buy physical gold or you can also buy gold. The second thing that you can invest in is real estate. Cryptocurrencies are becoming very popular nowadays, but the problem is they are highly volatile. Well, let's start with the basics. Now, the amount that you need depends on various factors such as your age, your income, and your expenses. So, you have to be very careful when you're investing in them. Now, if you live outside the United States, then you can invest in something similar to a 401k. Real estate can be very lucrative, but the problem is it requires a lot of capital. Similarly, in other countries, there are different schemes for retirement planning. Also, you have to be very careful when you're reselecting a property because not all properties appreciate in value. So, do your research, take your time, and only then invest in real estate. But remember, diversification is key. Don't put all your eggs in one basket. This is a great way to grow your wealth because you're not just relying on one source of income. Plus, it also gives you financial freedom. The third thing that you can invest in is your education. If you have any skills that you want to upgrade or any new skills that you want to learn, go ahead and invest in courses to learn those skills. It could be anything from learning a new language to learning about crypto. So, you don't have to spend a lot of money to invest in your education. Now, the fourth thing that you can invest in is precious metals, such as gold. If you're in the United States, then you probably have heard of the 401k plan. And even today, people consider it to be a good investment. The fifth thing that you can invest in is fine art. There are so many platforms where you can invest in art without having to buy expensive paintings. The sixth thing that you can invest in is crypto. Finally, the seventh thing that you can invest in is starting a side hustle. So, these were some of the things that you could invest in. But how should you actually make this pie chart? How much money do you need in your retirement account? But as a general rule of thumb, you should have at least $1 million in your retirement account. Now, how do you reach $1 million? Well, you can start by investing in a 401k. Then you can invest in an IRA. For example, in India, people invest in something called as which is the national pension system. Now, once you have invested in your retirement account, you can start investing in other things. For example, you can invest in stocks, mutual funds, real estate, or even precious metals. Now, if you still have some money left, then you can start investing in alternative investments such as cryptocurrencies, fine art, and collectibles. But remember to invest only a small portion of your portfolio in these assets because they are highly volatile and risky. Hope you found this video helpful. If you did, please hit the like button and subscribe for more videos. Thank you.